Thank you, Professor, for this interesting introduction. I think you are highly appraising me, showing most of the things that I have done in my life. Thank you. First of all, I would like to thank Dr. Ibrahim Mohammed Zain, whom I contacted him to arrange. I asked him, in fact, to arrange for this meeting or for this presentation, and he really was in a hurry to do it. And I'm really indebted to him for this job. First of all, I'm going to take you into a different issue, which is a book which I published 2 months ago. And the book, I have been working on it since 1990. You know, there is an Islamic system of microfinance and finance. And there is a conventional system which is interest-based type of financing and microfinance as well. I'm taking a third route, another system. I'm suggesting another system, which looks very odd because it's very peculiar that people are not talking either this or this. I'm talking a third system. I call it conventional route to interest-free microfinance, a new global paradigm. You know, interest, when you hear interest-free, it is Islamic, another way of saying Islamic. But I'm suggesting a conventional route to the Islamic formulae. That is in a simple way. The book has been published in Germany, but it has been also published in other seven languages. Because originally it was in English, but because the publisher feels that this is an international book which has got an international audience, they publish it in Russian, French, Portuguese, Spanish, German, and Italian. In the dedication, and this is very important, I said this book is dedicated to individuals who believe in the amalgamation of pragmatic execution and logical deduction. I'm planning to do a second edition. I have already finished another 3 chapters. The book is now 10 chapters. But the 3 chapters, because there is a conceptual framework which has not been included, so I think I have to make the idea very close to the audience, to the readers, by putting these 3 chapters. I'll give you the summary, and then I will go for a little bit of details. The purpose of the book is to expand microfinance all over the world through a universal, non-religious business model. Universal and non-religious. By this book, I mean the western part of the world, and Africa, in fact, via an interest-free finance system for the benefits of the all mankind. It does not do with anything Islamic, and it does not touch anything Islamic. So I'm Muslim, and I want the Muslim system to go as it is, for sure. People don't misunderstand me. But it is directed to non-Muslims. It concludes that the conventional, the Islamic system of finance, they have got different philosophies, yes. But when you come down to see what is going on into the practical operations, there is no any much difference. The second thing is that the Islamic formulae, which we have seen today, it was originated from the conventional side. Like partnership, there is conventional partnership, it has been modified, it become a short-term, short liability, and we label it Islamic, and it is good because it suits our interest. In Africa, I went to 3 countries, and I had not less than 9 cases. I found that most of the Islamic formulae are currently practiced in microfinance. But they didn't know that it is Islamic. They think that this is their own creation. The interesting thing is that when I ask them, did you consult or got the approval from the central bank? They say, we don't need. Why? Because it's allowed to do whatever formula. And that inspired me to suggest a new model that works with the same convention, same interest-free formulae in the conventional way, the way they like, without the need for changing the regulatory framework. But, and this is a very big but, I'm not recommending them to use the Islamic formulae without any restriction. There are two issues, transparency and fairness, because these are the most important issue for financing. Adel knows this fact very well. I suggest this model to be used by the IMF and the World Bank as a social mitigation program, together with donors like government, like NGOs, like United Nations organizations. They pool the money together and use this model for the benefits of those who are affected by the stabilization and structural adjustment program of the IMF and the World Bank. This is a quick glance about the contents of the book. In fact, it has got part 1, part 2. I'm now adding part 3, which is not yet included in the book. And you can see that part 1 is talking about the legal, regulatory, and supervisory framework, and the second part is the application, constraint, and suggested participatory model. I sometimes call it participatory model. I sometimes call it a third route, whatever. Now the third section is dealing with 3 issues. The pragmatic perspective of this model, because I need to talk a little about theoretical part as well, and the misconception or the fallacies pertaining to both Islamic and conventional. I try to list them. These fallacies forbid them to look the way I looked at the two systems and try to get a third one, because they are blocked by these misconceptions, and they feel that they had wrong things going on without even rethinking about them to get anything of value. The third thing is that I looked at the financial inclusion research. I researched a lot in financial inclusion. No one, no study, no paper, no book is looking at how these two systems can get together. It is either Islamic or conventional. No anything in between. No any type of relationship between them. The road was very long. I was having this idea in my mind since 1990. I wondered at that time, when I was newly into the Islamic system. I come from the academia. I did my master's in the IMF and my PhD at the World Bank, macro policies. Then I came to work in one of the banks in Sudan. First time to know about Islamic system and formulae and all these things. I was astonished. This is a very interesting system. Then why it has got limited application? Later, I came to realize that there are two main issues. After I talked to many scholars from Europe, from America, from UK, it came to me that the Islamic label forbids them to look at the Islamic formulae. And the second thing is that even if they admitted that they have to use the Islamic formulae, they will be constrained by changing the regulatory framework, because the Islamic regulatory framework is totally different from the conventional, because it includes fiqh issues. Now, I work with a very famous professor, emeritus professor, called Professor Malcolm Harbour. He's a small enterprise development professor. We started together cooperating, and we took a partnership, musharaka mode of finance, and we wrote together so many articles, and then we came to the conclusion that this formula is an international formula, but it needs fine-tuning. Means, I mean, the way they have been applied it in the Islamic system can be modified, which means that this is good. At least Professor Malcolm Harbour accepted the idea, but he disagreed with the application. Then I started doing a research with him. In 1997, I published an article about Musharaka and SMEs, published in one of his books as a chapter. And then in 1999, I wrote an article, I published it in UK. It's called, Can Islamic Partnership be Applied to Conventional Banking? And that paper has got a lot of responses. How come you integrate oil and water? In fact, I came to a conclusion that, very clear. After looking at conventional partnership and Islamic partnership, I came to a conclusion that Islamic partnership is conventional partnership with the limited duration, limited liability. So they took the long-term sustainable partnership between 2 or 3 partners, and they make a version out of it, and they call it Islamic. That is very good. This is very clever. It suits their interest, and that is it. So I'm not blaming them, in fact. But I'm asking the others why you are not using the same to reach the same conclusion. Why you are sticking to one formula, which is interest-based? Why you don't look at the Islamic formula to make something suitable for you? Just like when the Muslims, they took the conventional, the formula practiced in the conventional system, and then they modify it to suit their interests, that they are not going to use interest-based, they are going to use partnership, sales, leasing, whatever, and they make something, and then they call it Islamic finance. I participated with a crossfire debate with Professor Malcolm Harbour, and that also give me a lot of incentive to do more work. That was published in 2011 in an article. The central point of this book is called the participatory approach, and I will explain later. This term is also used in the Islamic system, but I modify it, and I still call it participatory because it also suits my interest. So, participatory approach without religious connotation. It was a chapter published in 2020 by IGI Global in USA. Then they like it very much, and they reprint it again in 2022. The same chapter in another book called the Handbook of Research and Theory on Theory and Practice of Global Islamic Finance. About the application mechanism, because they are talking about a system that has to go on the ground. So I asked the Islamic Development Bank in 2014 to give me a small amount of money to do an assignment, taking Ethiopia as an example. And the outcome I presented to what is called Ninth Conference of the Association of Ethiopian Microfinance Institutions, and then it was published in the proceedings of the conference in 2016. I had so many visits. I used to visit Africa a lot for work, for conference, for whatever. Whenever I go there, I go deep and see microfinance institutions and meet central banks for regulation, because this is my interest. So I observed that there are so many, formulae, Islamic formulae applied on the ground. I will show them later. I published so many articles, about 10, 11. I will show you at the end, just as if anyone is interested to go through them. Because these articles, I took small issues from the same theme and then write an article. At the end of the day, the whole idea became very clear to me. So I published it in UK, in USA, in Pakistan, in Ethiopia. Then I participated in a different brainstorming with practitioners like Mr. Adil, whom I work with, and other bankers and other microfinance specialists and academicians. They are divided when they see the idea. Some of them highly appraise it. They think, this is very clever, you have added something of value. Others, they say that it is complex to be understood better. We cannot understand. I try to explain it the way I like, I think, but they say if we can apply it, it will be globally very useful. The third, who are really militant, they believe that this system will dilute and distance Islamic finance from its original principles. Don't go, this is our system, don't give it to any other one and distort it the way you think. This is what they believe anyhow. I disagree with them because I'm not intending by this third route to change anything about Islamic system. I don't target the community of Islamic countries. I targeted the West. And I think that this system can be acceptable to them because the two constraints, as I told you from the beginning, which is a regulatory constraint, is no longer needed. Okay? And the other constraint that this is Islamic, no. We make it Islamic and conventional, and you can use it the way you like. Muslims will use it the way they like. So it's not a big issue in that sense. Anyhow, I put at the book that I don't want to judge about whether this third argument is true or false, whether I'm right or they are right, but I will leave it for the reader's discretion. Now, I have so many inquiries, as I told you, since 1990s. I'm asking myself, why the conventional system is not incorporating the interest-free, by whatever method they can use. The second issue I ask myself, is it going to subtract from the Islamic system if the conventional system modify the conventional formulae and applied it under whatever name? That's not going to. It will, in fact, it will add to us that we are the first one to use the system before even the West. And the West, they use the system to suit their interest. We use it to suit our interest. So no harm in that. People, I was also questioning why people are not exploring the origin of Islamic modes. How the Islamic modes from the beginning have been created. People accepted it as if it is, khalas, that's it. It suits Islam. Yes, it suits Islam. But how it is created, this is another question. We have to look at it. From where we get it? We decided to make Islamic system. We don't have anything. We change the interest into Islamic formulae. How we approach the system in order to come to this final stage? What is the requirement? If I want to integrate this Islamic formulae within the conventional, what are the requirements I should make sure that they should be satisfied? Because I cannot offer you a solution that is not applicable. So I was asking myself all of these questions. Let us go to the concept, because the concept is very important. As you know, when you talk about participatory model or participatory finance, it's more or less Islamic. They call it, Islamic finance is called participatory, profit and loss sharing, equity-based, whatever. All of these terms are used. Islamic system, interest-free, participatory, all. I use the same concept because I feel it is convenient to use it, but it's a parallel name as the Islamic system, which is emphasizing profit sharing, but it builds on the Islamic financing formulae, and it took away any religious connotations or character. That's the only difference. So this is, you can call it secular participatory finance, and you can call that Islamic participatory finance. Now, the most important issue I was trying, because if there is no way for the regulation, it will be highly theoretical models. Am I right? So I looked at because I am myself the regulator of microfinance. I studied and was the head of the department of the microfinance unit. I was a governor. I read a lot about the regulatory side, and I found that the regulatory framework is now divided into three. Either it is single regulatory framework with microfinance, okay, with separate Islamic microfinance guidelines, or a combined conventional and interest-free, or a one which is specifically for interest-free microfinance. I find all of these are having a lot of problems to the sector because they are dividing, classifying microfinance markets and institutions. They are limiting any innovations in the area. They are posing challenges to the institutional growth. I'm talking about the lending institutions. They block any learning from new development from each other, the conventional and Islamic, and they restrict the operational range. That is why I propose this new model, which is accepting the same regulatory framework. You don't need to do it. No need for changing the regulation. And that I was happy when I found the cases which I studied, I'm going to show you in a moment, that they don't even refer to the central bank because the same regulatory framework is working fine without any need for alteration. I'll talk about the theory and then the practice because I have to join together. When I talk about partnership and musharaka, they are more or less looking like each other. And I think the thinking about that, the Islamic formulae and the business formulae. I'm not talking about Islamic banking formulae vis-a-vis conventional banking formulae. No, Islamic banking formulae vis-a-vis business formulae. The formulae that has been used in business, not in banking, in the conventional system. So, as I said, the musharaka is a modified version of the Western partnership practiced in business. That's why I put it in blue. It found to be useful for Muslims or Islamic finance, and they use it. What is harm in that? It's good. Musharaka is a simple traditional partnership with limited duration and liability. There is no difference between traditional business and Islamic thought or risking sharing concept at all. The difference in the way they have been applied. They use it in the Islamic system while the West is not using it. That is the idea, the difference. You know, the salam and the forward lending, they are more or less the same, and there is a slight difference. The similarities are that in the delivery, impose is delayed until the end of the contract, and the difference is that the salam, the full price is paid by the lending institution in advance, but they receive the delivery at the end of the harvest. So, slight difference. Now, leasing and ijara. I found in the theory and in the practice as well, when I go to Ethiopia, they have got, fortunately, the two systems together in one bank. And I found the difference is only in two issues. In the Islamic system, any risk should be borne by the institutions. In the conventional system, should be borne by the client. That's one. The other thing is that if you want to insure the subject under a leasing, you should insure it in the takaful company, insurance company, Islamic insurance company. Whereas in the conventionals, you don't need to do that. You can insure it in the conventional takaful, in the conventional insurance company. As you know, murabaha and interest is no difference. Instead of giving money for money, you give asset for money. That's it. And there is another difference. The profit is called profit margin in the Islamic system. Whereas in the conventional system, they call it interest. So it's a difference. I will tell you one case who is applying murabaha in Ethiopia, and he's telling me that what I charge is the interest, what interest I have charged is, I said, this is not interest. This is profit because this is muraba and we are quarreling. How come? This is interest. I said, for you is interest, for me is profit margin because this is a sale-based formula. Anyhow, the major findings. As the first 3 lines, 6 lines, I'm not going to go through them because I have already done this. I will give you the cases. And this is quite interesting slide. When I went to in Kenya, I went to a microfinance bank for women. And the director is telling me that, look, I found most of the women, they want cows. And I give them money, and I don't know whether they buy a cow or not. I'm not quite sure. So I have a record that this money goes for a cow, and it might go for another sector, or it might be used for personal consumption. So I bought, I don't know, call it murah, Adil? Herd, exactly. And if anyone asks cow, I give her, choose any one of them. Pay in installment. I said, this is murabaha. My friend, did you ask the central bank to give you approval? He said, I don't need. So thank you very much. And I go out. I looked also into Salam. In a village of Zaria, I went down there, which is near Kano. It is not exactly Salam, but it resembles Salam. I was talking about this with Adil yesterday, who is an expert in microfinance in the application side. He's a director of a bank. Traders, women associations, agricultural associations in Zaria, small village, they finance their operations through taking a sack of the product they are producing from the traders. They sell it, they finance the operation. When they have the harvest, they took the same sack, the same weight, and then they give it to. So it's a win-win game. Everyone is happy. And it looks like Salam, but in the Salam, maybe Adil will explain the difference later, and I'm not going to talk about this at the moment. The third issue, I found one of them, MFI, he talked to me that I was suspicious that most of my clients in the agricultural side, they cannot pay in their installments on time. There is a lot of, what do you call in microfinance portfolio at risk is very high, unpaid loan. So I investigated the issue and I found that the problem is in the productivity. So I bought improved seeds and give it to the agriculturalists, and the output productivity has increased 3 times. So they are having a lot of money to repay back me. In fact, they repay before the deadline. I said, why? Because everyone, if he's not punctual with me, I told them, I'm not going to give them any improved seeds. So they are interested in the improved seeds that they pay early in advance. And I charge them interest. I was laughing, it's not interest, it's profit margin. Okay, now we come to, in Jima and Jor, it's small cities in Ethiopia. Also, it was growing coffee growing area. Salam was practiced there, surely, I found it. Also, in the Development Bank of Ethiopia, as I told you, traditional and Islamic leasing has been practiced with only these 2 differences I mentioned, which are you have to insure it in the Islamic Takaful company, and who bear the burden of any loss, the risk. The same law, I put the 2 laws together, I found the Islamic is the cut and paste from the conventional, except these 2 things has been changed. So the other thing is the same. There is a big program. Now there are 3 phases of this program. They call it Rural Financial Intermediation Program. It's also Development Bank of Ethiopia. They have been dealing with, it is a wholesale, you know the word wholesale for microfinance. They have the money from IFAD and the government of Ethiopia. They distribute it to MFIs. They make a sharing formula, one way or another, anyhow. When there is a newly Islamic microfinance institutions, they try to give them the money. They say, no, this is haram. Because they take the money and give interest. This is a wholesale. They distribute it and reap profit and give interest. It is just like borrowing from a bank. Microfinance institutions borrowing from a bank. So they introduce mudaraba. They share profit. And they didn't call it mudaraba. I name it mudaraba for them. They were suspicious. What is this? But it looks Islamic. It looks fine for them. But I told them this is mudaraba. In fact, we use in the Central Bank of Sudan, we use mudaraba contract as a major lending contract. It has been highly approved by the Islamic Development Bank when I was the head of the microfinance unit, because mudaraba cannot be used between a bank and individual because it needs the trust. You give somebody money, you go and do any business and come back, give me the profit and share it 50-50. He will take the money and then he'll never come back. But the microfinance institutions are registered. We are asking banks and central bank to lend to MFIs who are registered and under the control of the central bank. So this formula works with the registered institutions more than individuals. Major finding, I believe that there is an advantage of using an open, combined, non-religious, unrestricted, welcoming microfinance regulatory framework with guidelines that apply to both conventional and Islamic. Despite the conventional system or traditional system is using a single formula, there is connection one way or another between the interest and conventional system. And the conventional can adopt the interest-free formula as the way Islamic system has been adopting it, or by any other version, I don't mind. But there are some constraints, which I discussed thoroughly in these chapters. One is there is no channels if they want to do it. They have been doing now conventional. They might not do it together with conventional. They need separate channel. They call it interest-free, convention, and interest-based, or whatever they call it. I suggested so many. I will show you later. They don't have any experience because this is selling and buying type of lending. It's not interest. Give money, you return. Money is returning back. This is so easy. And that needs a little bit of work and headache. There is a misconception because most of the people I met, especially the Westerners, when you talk about interest-free, they are asking me how you make profit and you give money without interest, because they have got only one formula in their mind. I say no. We have a lot of profit out of the interest-free Islamic formula, because Islamic formula is sharing a profit of the institutions. So when I give you the money, and here you share interest, and interest is a tiny portion of the total profit. So we are profitable more than you. But the question is that the Islamic system is having a lot of cost. While it's having a lot of profit, it's having a lot of cost. But overall, the rate of return, I vindicated in one of my articles with Harvard, that the rate of return, which is the return out of any lending out of the total capital multiplied by 100% as a formula, I found it almost double in the Islamic system than the conventional system. I changed a formula from interest-based to partnership, and I recalculated what is called the rate of return, and I found it almost double. So it is very profitable, but it is very costly at the same time. Now, challenges. I believe that the system can be done as I said. Now, I'm not recommending Islamic system to be applied wholly in the Western part as an additional formula only. Because I do believe that, because since we started the Islamic banking, I think recently in the 70s, how many years now? Almost 50 years. We didn't reap anything of the West. All we are doing the same thing into our Islamic countries only. There are some banks in the West, but these banks are meant for Muslims, not for non-Muslim. Am I right? So why some banks establish banks in the western part of the world for the Muslims? Because it is profitable, it attracts Muslim saving, it gives more wide types of services for Mali chances. Now, as I said, the Westerners cannot have a full-fledged Islamic system, and we don't want them to be Muslims. And you are not going to Islamize people. You are going to market your system to them, to apply it the way they like. That is the idea of it. The interest-free finance under the participatory approach is recommended without Sharia, as I said, and it should adhere to the current regulatory oversight and framework governing the conventional system as well. I think this is a message I conveyed so many times. Now, what are the channels? You know, the channels of this, the challenge, I mean, of this recommendation is that it is very peculiar. Everyone is, what are you doing, brother? Mixing things, you are confusing us. And the potential perception of the said route is an attempt to dissolve the Islamic system, as I said. People can think that. I'm very afraid of this, by the way. But I have made it very strongly. I don't mean Muslims. I'm not touching Islamic finance and all this. I'm trying to propagate, to spread the Islamic finance all over the world. I have so many avenues for them, using the same branches, independent branches or department, internal division, financial subsidiaries, partnership with service provider, joint venture with the specialized microfinance entities, and securing wholesale funding. Even they can work it on a wholesale basis. You know, they don't need to open offices or branches. Whatever method you are going to use as a conventional bank, okay, maybe one or two or some or a group of them, it depends on the cost-benefit analysis, which is better for you. And the non-Muslim, when they come and choose any interest-free or interest-based, depends on the operation itself, the project. The project determines which one is suitable for the clients. Okay? And the cost-benefit analysis determines which methodology they have to use in order to apply the interest-free microfinance. Insufficient. One of the problems is that they don't have any information about the system, the Western institutions. And they are afraid that they might have a failure if they start applying it. I know that because this is new. When we started the Islamic system, some of the people, they wrote a lot, this is rubbish, it cannot work. Now it is becoming reality. So, sometimes a lot of people are afraid to start new things. And this is natural for a human being anyhow. Anyhow, I recommended the following. This is the last, maybe. I'm sorry if I'm late. One, I'm recommending non-Muslim to use financial contracts based on partnership, leasing, sales-based, and forward lending formula for a conventional microfinance, in addition to interest. I'm not ruling out interest at all. Solely based on commercial business and practical consideration without regard to religious belief or religious connotation within the formulae they are going to use. This book proposes interest-free microfinance as additional choice to traditional banks rather than a substitution, as I said. Unlike Muslims who look for specific Islamic banking products not provided by conventional bank, the same can also be offered under secular condition. The book also recommended, as I said, the same system for the IMF World Bank's social mitigation program. And I was astonished, the CGAB, the consultative group to help the poor, which is part of the World Bank, is now doing a lot of job in microfinance regulatory framework. All the regulatory framework we are using is originated from CGAP, belonging to the World Bank. But why CGAP is not using, even CGAP is also theorizing and putting suggestion formulae and all for the regulatory framework in the Islamic system we are using now. We are learning from CGAP even in the Islamic system. Why the CGAP is not having something in common? That's my question. And it was really very strange to me. Anyhow, and this I put it very clearly in the book, that CGAP has to change her mind, has to go for this system because it can work for both of them. Anyhow, I have the second edition, as I said. It's talking about pragmatic perspective as a concept. And then I'm asking to integrate this series of financial inclusion and correction of misconceptions, also correction of fallacies in both traditional and Islamic finance systems. There are 3 chapters anyhow going to add to the conceptual underpinnings of the book. These are the roadmap. You remember this is the last slide. I'm not going to talk about it. These are the articles which I wrote before I wrote this book. So if you can see, I wrote in different countries, different titles, taking different areas within the book, and then I put the same thing and I add, and I'm still adding into one book. I think articles, people cannot read articles, all of these articles. Let them read one united book to understand the whole concept and its application. I finish now. Thank you.